In this video, we're going to talk about hidden portfolio risk. Stay tuned. Hey traders, a very warm welcome to you. Okay, so how do we define the hidden risk that we might have in our portfolio? This might be if we're swing trading or even day trading. Often we've got multiples of positions on in different things, and we don't realize that actually we've got a lot more risk to one thing than we realize. So let's have a look. If we're trading currencies, for example, you're trading Forex, you're trading intraday, you've got, let's say you've got your majors here, USD, GBP, JPY, and put Euro on here, but you could put Euro on here, you could put anyone on here. The point is, if you're trading a combination of these, you might find yourself overly exposed to one or the other. So for example, let's say you've got 3 trades on. You've got pound yen, you've got euro yen, you've got pound US dollar. You might think I've got 3 separate trades on, but have you in reality got 3 separate trades on? Because look how exposed you are to the yen and to the pound compared to euro and US dollar. You know, your yen exposure is quite significant. Because if the yen is going to move on its own, forgetting how it's going to move, the other currencies that it's paired with are going to move. If it's going to move, you're going to get 2 trades that are going to move in the same direction, because just purely the way you've got that structured. And same with the pound. If the pound is going to move, you're going to have 2 trades that move in the same direction. So you're going to have double whammy. You've got double the exposure. Now, the way to mitigate that is to say to yourself, okay, well, I will make sure that I don't have any trades where I have the same currency on the same side. So I need to kind of reduce the trades. I need to say, okay, I don't want to go crazy with that, because ultimately, guys, you might have picked something that happens quite a lot on the market. In other words, if you're trading the yen, you might have seen some charts that are exhibiting the same kind of thing. In other words, if the yen's moving, let's say it's moving, the chart you're trading, I'm not going to say strengthen, the chart you're trading is moving to the upside, it's pulling back. That might be happening across the board. It might be happening across all the yen pairs that have that kind of chart pattern. And obviously if you had the yen on this side, it would look opposite. You'd have a down move if those were showing up moves, if it was based on the yen. And so you might be taking those thinking they're all individual chart patterns, when in reality you're just trading the yen on its own, but unfortunately you're going in 3 times your risk because you're trading it against 3 pairs. Now, I accept it's not completely direct risk, because of course if the pound's going to move and the yen doesn't, you're going to get some movement that you're not going to get if you're trading euro against the yen. But you have got that risk that you've got to take into account. If something comes out in Japan, you know, the BOJ says something, then any trade you've got that's got the yen in it is going to move in one direction. Okay, or it's going to move in the direction depending on which side of the pair the yen is on, but they're all going to move, and so you're going to be exposed to that move. So the easiest thing to do is to say, okay, you either say, I accept that and I've got my plan of action in place to kind of deal with that, or I say to myself, you know what, the yen is too much for me. I don't want to take on that risk. What is the best setup? Let me take the best setup. Now, you know, you'll take that setup, the other one that works for you. You've kind of got to work this out over time, but taking the best setup and maybe putting more size on that, allocating twice as much size perhaps as you were going to do, rather than splitting up so it's easy for you to focus on, or carrying on as you are, but just understanding and saying, well, actually, you know, have we got BOJ coming up? Have we got something coming up that's going to potentially move the yen? How will it affect my pairs? You know what, it's going to make them do this, it's going to make them do that. That might stop all of them out based on one adverse move. So in other words, I've got a lot of risk here. Something comes out in a BOJ, that is going to stop out every single one of my positions because I'm all exposed to yen, or most of them. And so accepting that and saying, do I really want that? If you do, fine, but not being surprised if that does happen. And it's the same if we look at stuff like, you know, the indices, DAX, FTSE, CAC, all that kind of stuff, SMI, all those kind of things. You know, they have a lot of correlation. Generally, from time to time, it goes in swings and roundabouts, as we know. If you've been trading for a while, you kind of know we have correlation. Sometimes it's tick by tick. We've had times when DAX and FTSE have been almost identical, but 2 to 1. Times when, you know, they just completely go out of sync because based on different constituents. But understanding that if you're long Western indices or indexes or broad stocks, you have got that exposure that if something comes out and you're trading quite aggressively, quite a lot of margin, you have a couple of down days, you're going to get stopped out on your DAX long, your FTSE long, your Dow long. Most likely all of them are going to move in sync and stop you out to some degree. Same with the metals, the gold, silvers, platinums, all that kind of stuff, and commodities. And we're not even talked about commodity currencies. If you're trading some of the commodity currencies like CAD or AUD, and you're trading commodities as well, then you've got exposure because those are going to move relative to perhaps how some commodities are moving, copper or have you. And if you're trading both in the same direction, you've got that hidden exposure that you wouldn't necessarily be immediately obvious to you unless you're aware of it. So there's that. And then, of course, we've got sectors. We've got kind of broad stocks, a lot of hedge fund favorite stocks. If they're into it and there's something hits and a lot of people are pulling money out temporarily, you know, you're going to get hit on all of those. So this is common sense, guys, but I know that, you know, even from my own experience, sometimes you take trades on and you don't realize the risk that you potentially have. And if you're holding stuff a longer period, all it takes is something that comes out. And even finally, even correlation between, you know, some of your currency trades and your index trades and your commodities, you can have them all linked. You know, if you're trading this, and this, and they're all, some sort of broad news comes out that affects them all and they're all correlated, not inversely, then you might get a wave moving on direction. So this is really something for guys who are holding swing trades and portfolios and understanding it. Also from day trading as well perspective, you know, being aware of your economic calendar and what your daily risk coming out is, your event risk based on the scheduled releases that are coming out. But just accepting that there is some correlation of risk there and just being careful, guys, just being sensible and not you know, not overloading your positions. I never recommend having too many positions anyway, because I feel that it's better to be focused on, you know, a few. Of course, if you've got some that are swing trading, they're running nicely, they're in the cruise, I call it, and you can forget about them, all very well. But when you're, you know, kind of trading actively, I think it's hard to keep a tab on a lot of them. So, and that for that reason as well. All right, guys, good trading. Take care. Keep your risk managed, including your portfolio risk. I'll see you in the next one. Goodbye.